All right, so January 30th, bar by bar recap. And I'm going to try and do this really quickly because I'm supposed to be taking a call very soon. So we had a big gap down and we had a wedge top. I don't want to, actually, do you know what? I could probably do this. We had a wedge top, three pushes, one, two, three. So the market is going to try to get down to this level. So we're going to put a marker there. This is the bear target for the day, right? Now, we also know that we had a big sell-off in the Globex chart. So what I'm going to do is I'm going to show the first bar. Okay, so this is the first bar, and we have a big gap down. So what we want now is the market will most likely do one of four things. Yeah, we could have a double top towards the moving average, a wedge top towards the moving average, a double bottom away from the moving average, a wedge bottom from the moving average, right? If we have a double top and a wedge top, that is a trend continuation pattern. Essentially, that's a drop, pull back to the MA, and then carrying on, just like we have a pullback each time, a two-legged correction. A wedge away essentially is this sort of price action where we have gone too far and now we're correcting to reverse. Okay, so the first bar we have right now for a very big gap down. I think it's also relevant. It's good to measure how far the price has opened from the gap, just to get an idea of how far you are. So 36 points, and then also how far from the close we are, which is 29 points. So not that far, and then from the previous day's low is 7 points, not far at all. So if anything, it gives you a clue or an idea of what some targets would be. So if you have this as the previous day low, you have this as the close. Let me just bring this down. So that's your close, and you also have your moving average up here. So those are the three levels that we're interested in at the open. As you can see, the first bar has essentially just accelerated up to the previous day close, and traders have taken profits at the previous day low. It's kind of like an easy scalp, right? So imagine you bought here for 5 points, you're going up here, and it's a very, because it's so close, it's a magnet. Okay, so we just get that out. So that was 7 points. Now we have two bull bars, one big closing on its high, and in fact both of them are big. However, this is closing on its high, so this is by the close above this bar. Right, so traders can go long above that bar, put a stop below here. It is high risk, but it's also high probability. So imagine you put this down to this, you're risking just 12 points, 12.25 points. Okay. All right, so you would have been triggered in at the top of this, but of course it's three pushes up, it's a wedge, so most likely this will be a bear bar as well. Okay, but as you can see, the 50% pullback of this move had been bought. A lot of traders don't want to buy at high risk, so what they do is they put a target in the a limit order in the middle of the three bars. So we're now going for a second leg up and probably taking profits. So this is probably a measured move, maybe based on this whole thing up here, or possibly even based on the actual pullback itself. Maybe you can actually see, don't know, this is me trying to fit it. I would say the measured move target is probably from the low to the close here. So that is the measured move target. All right, anyway, so you buy above this bar or you buy this close, pull back 50%, and now you know there's a target here. So if you bought here, this is your risk. You can get 2-to-1. All right, so now you have a this is actually a breakout test in the Globex, I believe. I have to go check, or probably no, I'm not sure. Anyway, we have a pullback over here, and this is quite a tight channel. I'm sure that we're going to get some buyers above. Not above, sorry, below. You have a wedge bottom, 1, 2, 3. Traders bought that. This is a trading range over here, so this is a 2-bar reversal, but it's also closing very close to this low, and therefore most traders will buy here. You have a nice double bottom, higher low, so you could definitely go a lot higher. You can definitely buy this low because of the fact that you do have traders who are trading this range. You don't have good follow through. All right, so we now have a possible measured move based on this all the way up. All right, so the first measure move target is we just about got to it, this first measure move target. But right now we have 2 legs up already. So chances are, and it's a wedge, so chances are we will probably start to find some sellers. So you can imagine this is the first leg, second, third. And exactly as we said, we're close to the moving average. We have a wedge top. Now we have a sell signal. It's not a very good sell signal. I remember at this point I took this trade, and I screwed up the sort of process itself. I was looking at too many charts. But anyway, you could, in fact, let me just see if yeah, that's actually even better. That's just buying up. Actually, that's not the way I would do it. Just buying above that. There. Anyway, yeah, you can see the measure move target has been hit. We're very close to the moving average. We haven't tested this close. We've tested the low of day. We haven't tested the moving average yet, just this. And let's see what happens after that. All right, so now we have a wedge top. We have a pullback that's forming. Like I said, these are 2 legs already. So technically we have fulfilled the criteria for the bear move and the pullback. You could go short over here, but the fact that you have a bear bar suggests that maybe you might get one more leg up, right? However, the gaps are closing, so the bears are not losing money because they're able to close their gaps, but not with body gaps. Excuse me. Now you have a body gap that's closed. You have a micro wedge bottom over here. 3 pushes down, right? The problem the bears have is these tails. This is the only signal to go short on, but it's coming very far away from the moving average. It is still a good short, in my opinion, if you go below this bar, only because you didn't touch the moving average before this move happened. Some bulls are expecting another leg up right now, and some bears are expecting it will break out below the wedge because this is a micro wedge, but it's a very strong close below at the bottom of the wedge. You get a breakout below the wedge, so therefore this is useless now. And now you have a new measured move target for this breakout, this level here. Most traders who are long would get out here. Most traders who want to enter will enter here. All right, now we have some traders who are buying this level, this close. Maybe there's some profit taking going on over here. There's a possible measured move as well. I'm not sure entirely. I don't have one here because I wasn't planning on taking this trade. No, probably that's the measured move. But I imagine the traders who've actually shorted below the wedge, because this is a value. This is a valid target. This is one leg, right? Are targeting this low, and they're probably still short. Oh, just before we do that, we also have a higher low double bottom. So anything above this is a buy with a stop below here, right? But it's following so many bear bars. So you could argue this is a bear trap from this. However, this is so strongly down, and we didn't touch the moving average. Maybe we're trying to test it. The bulls were not triggered on this bar. Instead, the bears sold this close and took out their stops. So we are still going down. We're beginning to break below this and possibly forming another wedge. Now we have another wedge. They've hit their target. Now they're taking profits. We have a double bottom here. Just mark that. We have a double bottom. Now the bulls need a bull bar. And if they can get a bull bar, that will be a credible buy for a second attempt to go higher. So a W pattern. They don't get a bull bar. Instead, we get a bear bar. This is now, oopsie. This is now a sell to close. In fact, this was a sell to close setup, but now we have broken the low of day. We have another measured move target. For the entire range, right down here. We have a lower high 2 legs down, 1, 2, a micro wedge here. It's a credible buy. So the bears who shorted here, obviously taking profits. So you now have bulls who bought here, who are buying again because they need to get out, break even. All right, so what do we have? We have a doji. So it looks like we're going sideways, and we may get a two-legged correction to the moving average. Remember, we never touch the moving average, so this move will most likely touch the moving average. So this is the first leg up and a pullback. The second leg up, a pullback or a pause. All right, now that's the pullback. The third leg up. We now have a wedge. So we have basically 2 legs, 1 pullback, 2, but 3 pushes. All right. If we get a bear bar over here, that is a credible sell for a second leg of this. Instead, we get a bull bar, so we're still pushing, but we haven't closed above the moving average. Now we get a bear bar. This is not I mean, it's an okay sell, but it has a tail below it. You ideally want a bar like this that doesn't have a big tail. I mean, this is still okay, but it has a tail. You can sell below this bar with a stop over here, and you would go and target this level. All right, so you've now triggered in the bears, right? But what's happening over here? We have a 50% pullback from the bulls who bought this level and are trying. No, not from the bulls. From the bulls who missed this move, who want a second leg move from this. We get a second leg up. However, we stop at the moving average, and now we're forming a triangle. I'm just going to delete this because it's getting messy. So we're now forming a small triangle. We always get these triangles usually whenever we don't get the next leg up. And look at that. So now the triangle is complete. 1, 2, 3, 1, 2. Usually need 5 points to complete the triangle. And now it's breakout mode. We can either break out to the upside or break out to the downside. If we break out to the downside, then the bulls who bought over here are trapped. They now need to buy again to get out, break even. Most likely a measured move down. They will buy around here. If we go lower. Right, we've broken the triangle, but we now need follow through. We have 2 bear bars, 1 big closing on its low. This is actually sell the close over here as a double top at the moving average. This is a credible sell, so we should go lower, and we do. We have another micro double top here. The bulls need to buy, so we have 1 leg pullback, a second leg possible pullback. Now we're getting an exhaustive sell, and of course, remember those bulls who bought over here who are trapped, they bought again. Now they got out, break even. Right, back to their sell. Let me just move this so we make it look neater, and just move this to that point. Right, so we now have a double bottom, testing this low, and now testing the moving average. So 2 things can happen here. We can either break out or we can reverse. If we reverse, this is a trap, a failed breakout of the moving average. If we reverse, if we break out, then we will then officially go into a trading range. Now, what is the problem here for the problem for the bulls is all the bears stops have been protected. We're making lower highs, and this is all you need for a bear trend. You're making lower highs as you're going down, so all the bulls need is to get past this level. All right, so we get a doji. That's not a very good sign for the bulls. We get a micro wedge, 3 pushes up, right? 1, 2, 3. Now this is the wedge, a double bottom here. This is a credible buy signal. Now, if you were thinking of buying at this price is not a good idea. Buying above this price is okay, but buying here isn't a good idea. And the reason why is because this is resistance, and this is the top of a trading range. So you don't want to be buying up here. This is a second leg move here. It's a second leg. So we need to go above it, and we don't. Instead, it gets sold. And now we have a 50% pullback. Let's see if the bulls will buy it. There are not many buyers. We do get a wedge, micro wedge top. Sorry, micro wedge bottom. So you can imagine 3 pushes down. Some bulls bought this low because it's 3 attempts lower and it's a higher low double top, a double bottom. And now this is a credible buy. Some bulls get triggered in, but we get a bear bar. This is not a good sign for the bulls because you're expecting after 3 attempts to go down, 1, 2, 3, we should start rallying strongly, which is probably what caused this bull bar to rally so strongly. However, we're not getting the follow through that we want. Still very bad follow through. And look at this. So you have 1 pullback, 2, and then a collapse. So essentially what you now have is bulls giving up. They had a double top. The bears sold the double top at the moving average. So this is a high probability sell just below this bar. And they now have a bigger wedge forming. Now the wedge is complete. You can now extend this line because you now have a real double bottom. However, this is not a very good signal bar to go long. No one is buying. Bears are selling. We've now made a new low. Of course, if we make a new low, the bulls are going to buy. Remember, we have trap bulls over here. Let's see if it's a measured move. I don't think it is. I think it's just shy of the measured move target. Okay, so some bulls would have bought that, or you'd have some profit taking. And now we're forming a micro wedge. Now remember, we had the bulls trapped here. The bulls definitely trapped on this bar. So of course, they had to buy again. They bought this low, probably got out 50%. Like if they bought this low, their midpoint, if they bought again, where is it now? If they bought this low, they would have gotten out 50%. But then again, remember, some of them are still trapped because they're buying closes, so they would need to buy again. And they probably bought above one of these bars. And they would either get out break even here, which is probably why you have this double top. And let's see what happens again. So that again is a nice break above the moving average. We now need follow through. We have a doji. That's not a good sign. You actually have an inside, outside, inside. Although this is below, I do like it when this is a whole pattern on its own, but it's a trading range still nonetheless. And get a break below, not a break above. That's not a good sign. Now you have a credible sell below the moving average, and the bears have taken it. So now you have a bigger triangle forming. Actually, no, you don't have a bigger triangle. But the point is, you had a triangle forming. You had a triangle forming here. 1, 2, and 3. 1, 2, and 3. So now the bulls. In fact, let's just mark that, and I'm going to mark it with a different color. So this is your triangle here, and you could argue that's the apex of your triangle. Yeah, normally I just mark this because you know it's coming down here. Now the issue is the bulls have had this double bottom. This is the first leg up, a pullback, second leg. So this is a two-legged move. But the problem is it's almost like a reverse two-legged move, right? And now the bulls have completed their two-legged moves, and now the bears are selling. So this is a breakout possibly. You have that, and now you have a micro wedge and a double bottom. This is not a great signal bar to buy. It's a bear bar, so it's not a good buy. Now that is a better signal bar. You can buy that above that bar, would be great with your stop below. And of course, there are some bulls who are still trapped. They need to get out. So I would put a measured move. Well, first of all, those bulls who are trapped here, we have a measured move target for them. I'm going to pause this. So I just paused this thing, even though it looks seamless, but I've forgotten what I was doing. But yeah, so right now we have we had a bull trap, then we had a credible sell here. Bulls are trapped here, so we have a measured move here. So right now we're thinking, wow, price wants to get down here. Possibly there is a chance we could get down here. Bulls would want to buy this bar because we have a wedge, a double bottom. Let's see what happens in the next bar. The next bar is a doji, so that's not very good. Bulls are not getting the follow through they want. Right now it looks like we're forming a bear flag, so that means we may get a second leg down. Okay, so now we have a second leg up for the bulls. It's testing the moving average. It's also a wedge top. Now we have 3 pushes up, 1, 2, 3. You could argue this is the actual wedge, 4 pushes if you want. It's at the moving average. The problem here is it hasn't broken. It's a 50% pullback. The bears would take this as a great opportunity to go short, because remember, they have shorted every single time on the moving average. We're getting lower highs. Yes, we may not be getting that many lower lows, but the point is they're still protecting their stops. Right, so we now get a breakout below the wedge, the wedge, and it's a second leg of this, right, from a 50% pullback. So chances are you're going to get sellers below this bar. You have triggered in some sellers, some bulls who are trapped see this as a double bottom. They try and force a trading range here, and they get out break even at 50%. So all the bulls who probably bought here are buying this low, getting out 50%, and this causes this to come back down here. We have some sellers jumping in, more sellers who sold here with the bulls. They too are expecting prices to go lower. But of course, we break the low, and every time we break the low, we find buyers, because it's a very two-sided market. It's a broad channel. But the follow through is really bad, and you expect this because this is 2 legs down. You can almost argue a measured move as well. In fact, let's actually see what that looks like. So you have a leg 1, leg 2. All right, we do still have a target to go down. I don't know if it will go down that low. All right, so we now have 3 push. Well, we have 1 push, a second push, so we need 1 more push for a wedge. Oh, maybe we did have no. Okay, yeah, that's the 3rd push. So now we have 3 pushes down. We didn't exactly make the target, but right now you should start getting some profit taking. Oh, we're still going lower, and we now finally make the final push, which is the 3rd push here, right? So we did go past the leg 1, leg 2 move. We're now getting some profit taking. We have 3 pushes, 1, 2, 3, or you could argue 1, 2, 3. This is a credible buy signal, at least to the moving average. We have a double bottom, and some bulls are buying, and we get to the moving average. Now, this is still a channel. Remember what has been happening all day. They sold moving average, sold moving average, sold, sold, sold. So what do you think is going to happen over here? Exactly. You get a bear bar, right? And this time, this bear bar gets all the way to the bottom. So bulls who bought here, who are trapped, again, buying, trying to get out break even. They get to their 50% mark over here. They get out. And this causes this big sell. You get sellers who are selling this as well, and you're pushing prices there, and we break out. Now things are getting tighter. We're getting a new low. Of course, we're going to get some profit taking at that new low, but we know this is a breakout, so we'll probably make another low down, because every breakout moves into a channel. So 3 pushes, 1, 2, expect 1 more push, and 3. So we have 3 pushes. We now have a wedge, and a wedge, you get profit taking, and the bulls will buy that. Again, what are they going to try and do? Test the moving average. I think we're getting close to the end of the day, but what do you expect is going to happen here? Again, sold every single time. Bulls are going to try and get to this. And of course, we get another sell signal. This is the thing about trends. A trend has momentum and inertia. It will keep doing the same thing over and over and over again until something changes. And as you can see, each time we have gone to the moving average, we have found sellers. So that tells you how strong this trend is. The fact that every single time they're scalping, they're protecting their stops. You have double tops, and they're not. The bears are still in this. We still have this measured move target. We've tried one more time by the bulls. We tried to get a second leg of this. It failed. Instead, you get 3 pushes. So this is now another micro wedge. And we get to the final measured move target. So all those bulls who were trapped here, they're buying here. They need to get out. So we should get a bull bar. And we do. Now, I can't remember what. Oh yeah, we're already at the end of the day. I think and we start to try to reverse. I think eventually the price needs to get over here for them to get out break even. And I think at this point, yeah, everything is over. This is literally I didn't actually mark the wedges. This is a problem, I forgot. But this is literally what you do throughout the day. You're reading the price action of everything as it's happening, and because the market keeps repeating itself, you can get a sense of when you're expecting, the reversals. And also, it's human psychology. We keep doing the same thing over and over and over again. And if we keep doing it over and over and over again, at some point someone's going to give up. The bulls had not given up today. They kept buying all these new lows. They kept buying all these wedges. The hallmark of a trend is when all your wedges keep failing to reverse the trend and keep making new lows or new highs in a bull trend. And that's literally the best way to trade this. So say for instance you see you're on a triangle here, and then you break out of the triangle after two legs and the bulls are not able to make their two legs. Then you now know we're probably in a trend. You get another trap, you get a bear bar, you sell that. You sell every single bear bar at the moving average. And then guess what? You could also sell every strong bar at the moving average as well, because these bulls are going to lose. And it's literally how you trade trends. And you bet on new lows. So you could sell at the moving average every strong bar, betting that the price is going to get to that low, and therefore you're going to take your profits there. Which is another reason why you're getting all these. Every time we make a new low, we're always getting these sort of dojis and these sort of hammers, right? After a wedge, you get a nice one over here. You're going to get some profit taking there. Wedges always tend to lead to profit taking, and as a result, you have these reversals. All right, I hope this was helpful. This was the tick chart, or this is the tick chart, and like I think I said yesterday when I did the recap, the price is going to try and target this level before we reverse. Right now, the market is still open. You can see we've finally broken above the moving average, holding, and we should try and reverse over here. It's the spike, pullback, and channel. 3 pushes, 1, 2, 3. This is the wedge. You get the reversal. This is such a steep drop. This would yield another leg down. We had a triangle here. I reckon we probably will go lower, but let's see what happens. If we go back up and we don't take out this high, then chances are we'll probably break lower. I think when you look at the higher time frame itself, we have two pushes, 1, 2. I don't know if we're going to get a third. One could argue that, this was a minor reversal from this whole move, so chances are we're probably coming down. This is a two-legged move, so this is one leg, pull back, a second leg. All right, that's my that's my bye bye recap.